The U.S. labor market showing some cracks. I'm Lisa Bernhard with Reuters, and joining me today is Brian Mulberry of Zacks Investment Management. Brian, today's jobs report from the Labor Department showed the fewest number of job additions in 6 months and cooling wage gains. But does this mean, as I think investors are now hoping, that we will see at least 2 rate cuts from the Fed this year?
Yeah, it's a very interesting question because we've seen this paradigm playing out over the last year where softer economic data has been good for equity markets because of that relationship to interest rates. Now, the Fed is certainly trying to engineer an environment where fewer people are working, they're making less money. That means they'll spend less and prices can come down. So that way inflation can cool and they can thereby cut rates or reduce the pressure on the economy. The problem is the labor market is a relatively leading indicator. And so what would tell us in the moment if they're getting closer to rate cuts is probably something more like retail sales having a significant downshift. But there's also an interesting question that comes to mind here as this is the lightest jobs report in 6 months, and the last GDP report was about half of what was expected. Does this mean the economy is really slowing down? And does that mean rates might actually get cut for a different reason? I think that's an interesting question as well.
I'm going to shift now and talk about Apple because shares are up today about 6%, even though they've lagged this year, and that's on the back of earnings yesterday. But we are still seeing lagging iPhone sales, and we don't really know the company's AI plan, although presumably we will soon, according to Tim Cook. How much pressure is there on this company?
It's a highly competitive market. There's no question. And a lot of the miss in iPhone sales was definitely due to China, off by 10%. That's a pretty big miss for them. But it's also a very competitive marketplace where you have a lot of other handset manufacturers in China that are more or less captive to that market. You don't find them here. Where it's a more level playing field, Apple seems to be doing okay, but there's absolutely no question revenue has gone down. So what are we looking at here in terms of a company and their growth rate? It definitely has slowed. There's no question about it. But Apple has been able to build up $170 billion worth of cash on hand. So they're a very high quality balance sheet, very low levels of debt. They're not really bothered by these high interest rates that we're living in right now. And we're starting to see, I think, the company mature in the management of that cash flow, now offering a huge buyback of those shares. That's adding value to the current owners of the shares that are out there in the marketplace. And it's a little bit of a pivot for the management of the company, saying we're not investing $100 billion in a product that's going to grow the company into the future. They're simply adding shareholder value in a little bit different way now.
Well, someone who's made a big bet on Apple very successfully is Warren Buffett. And tomorrow is Berkshire Hathaway's annual shareholder meeting, and it will be the first one since Buffett's longtime partner, Charlie Munger, died last year at age 99. So first of all, I just want to talk about what do you think the tone of the meeting will be?
It's always such a great weekend for what we do in this business. It's investor palooza out there in Omaha, and everybody gets excited to hear just the energy around the room year in and year out has always been fantastic. He's been a great spokesman for what we do. But I would expect this year that there's going to be a rightfully subdued, kind of a quieter tone to the meeting, missing what really is the biggest piece of this live presentation, which is Charlie Munger and all of his Munger-isms. I believe they're working on a book of them separately so that we all remember. One of my favorite quotes is, when the tide goes out, you find out who's wearing a bathing suit, really. And that is just, exposing quality in a little bit of a different way. So missing him, I think, is definitely going to be an impact on the meeting overall. However, it's always packed full of great information about the current state of the economy, about what investable ideas look like. And you always get taught a masterclass in discipline when it comes to having a rigorous process and a discipline holding period. So we're always excited to hear what they have to say.
So what do you think will be the primary talking points? And I imagined Apple would be among them.
Yeah, Apple represents around half of the holdings of Berkshire Hathaway. Now, what's important to remember is that doesn't mean they actually invested 50% of their investable assets to get there. They've just simply letting Apple's great run grow inside of their own portfolio. A lot of other managers have decided to trim out the position weights. And Warren has always been just a big believer in Apple's future growth. And so he's just simply let it ride in his portfolio. And so now it does represent a big holding, And I think he does have to speak to what he sees coming in the future. Obviously, their Apple's play on AI, which is one of the biggest drivers of growth in this market today, has been very slow. They've only had a couple of offerings and they have not had a huge expenditure when it comes to investing into the type of technology or the development of new products. That means that they're actually running a little bit cleaner with less levels of debt. I think that probably makes Warren Buffett happy. But what is the question is, how do you grow in the future if you're not investing in yourself? We need a clear answer to that. And I think Warren always has a great way of getting to the meat of a question like that.
So then let me ask you this, which I'm sure is not the first time that this has been asked, but is there a next Warren Buffett?
I think there's two answers to this question. And the first is Berkshire Hathaway will be fine. They have done a great job at grooming the next couple of generations of managers, and you will see a clear process in terms of the changing of the guard from one to the next. They've defined that very clearly, and there's a high degree of confidence in the ability of the younger executives to execute in the same fashion. Now, will there be a separate oracle out in the universe that arises that has, such a clear and sharp intellect as Warren Buffett? I think that remains to be seen. What I would expect is a lot of academic study between Charlie Munger's life and Warren Buffett's, and they try and plug that into an AI model and replicate it from the start somewhere else. But that's for somebody else to invest in and decide. And we'll see actually who might be more right. Is there an actual individual out there, or will AI start to produce better returns on its own? I think that remains to be seen. And luckily for me, I think that's pretty far off in the future.